Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all this previous push to the upside started. Again here, the market tested its zone and rejected it to the upside. Again here, and again here. And at the moment, the market is testing exactly the same historical support and demand, from which there is, again, a good probability of seeing a potential rejection to the upside away from this area, as already happened in the past, every time that the market was testing this exact same zone. So here in the monthly, everything seems quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how this area is currently acting as a quite strong month, in this case weekly, but also monthly, because we have seen it that is pretty much the same zone, demand and support. We can notice how also here in the weekly, the rejections to the upside are quite clear. And it is also important to notice how the very last rejection away from this support, which is this one here, was extremely harsh. The market just tested the zone and immediately created this massive rejection to the upside. Now, at the moment, we're not seeing the same thing. We're seeing the market slowly going for a test of the zone. So there is the possibility for a deeper test of the zone and potentially to see an accumulation happening inside of the area before getting then a potential rejection to the upside. In fact, if we drop down on the daily time frame, we can notice how the market is already starting to print a potential exhaustion pattern. We can notice how we're getting a lot of sideways price action inside of this zone. And when you have a market which is inside of a strong historical demand and support, and it starts to move with essentially a lot of ranging and a lot of consolidating price action, usually that means accumulation of longs from an institutional perspective. Because keep in mind that institutions cannot just press the button and buy. They need time in order to accumulate their positions, because always remember that in the market, for every buyer, there needs to be a seller. So if there isn't enough liquidity in the market at a specific time for them to just buy the entire amount that they want to buy, they need to keep price in that range in order to accumulate the full position. So that is why very often when the market is testing a strong historical structured zone, from a daily perspective, you will start to see horizontal price action and then the rejection. In this case, the opposite, so horizontal price action at the bottom and then the start of a potential rejection to the upside. So this is definitely a possibility. And we can see how the market is starting to create essentially this exhaustion pattern. So there is a possibility to see a bit more and then a potential rejection to the upside. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. And let's look at the data precisely for the AUD. Now, if we look at the data for the AUD, we have to keep in mind that we are already looking at AUDUSD, because all currencies on the spot are traded against the USD. And what we can notice is that with the last reports, we went from having 19.2k net positions all the way up to having 31.7k net positions. So institutions have been moving aggressively to the bullish side of the AUD, therefore to the bullish side of AUDUSD. And we can notice that by the fact that just with the last few reports, institutions have increased their longs from 83.5k to 88.6k, and shorts, if we look at where we were at the top, we were sitting at 110k shorts. Now we're sitting with 56k, so essentially they got cut in half. So longs in the very short term are getting increased. Longs in the long term definitely got massively decreased. And this is all happening on AUDUSD because all currencies, as we said, on the spot are traded against the USD. So looking at the data for the AUD is already AUDUSD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this historical monthly demand and support area. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.